Hi there, it's June 2021. How are you today? I love to show you the portfolio and the new stock I added to my daughter's dividend portfolio. Welcome to my channel where you can follow my journey to set up and maintain a dividend portfolio for my 5-year-old daughter. I started buying dividend stocks for my daughter for at least $50 every month starting January 2020. Next to that, in December I bought a fraction of a Bitcoin and halfway of May I bought some more, totaling in 0.01 Bitcoin. Watch the whole video to find out which stock I bought for June and why. June 2021. I bought the 18th dividend paying stock and will give an overview of the portfolio and the market in May. This month I will analyze and compare the Hormel Foods Corp and Procter Gamble. If you are new and like to follow my journey and see the dividend portfolio of my daughter grow, then please consider subscribing. I upload a new video each month at least. Let's do a recap for my previous videos and discuss the market, the S&P 500 as well as Bitcoin, and of course the portfolio in May. I have bought 17 dividend paying stocks. Along the way I diversified along each sector according to eToro, the broker I use. I have ensured that there are dividend payouts each month. Actually, now the portfolio has at least $1 in dividend payouts each month. So I can invest this directly the next month in a new dividend stock. So what happened in May? The S&P 500 started at almost the same number as it ended, at 4,200. And my portfolio overall did not move very much as well. It had a small decline from 19.6 to 19.1% in the green. Approximately half of the stocks went up and the other half went down. Noticeable are Cardinal Health, Disney and AT&T. They all went down a little over 5% compared to last month. AT&T did a dividend cut, so that did not help. On the plus side, GPC, T. Rowe Price and again PPG Industries went up over 5% compared to last month. PPG Industries keeps on growing and is now up 66% since I bought it in August last year. And Bitcoin? Bitcoin dropped from 57,000 at the start of May to 37,000 at the end of May. It even went to 30k one moment. And on the way down at $45,000, I decided to buy 0.01 as I mentioned in my last video. I sent it to Blockfolio, which gives a 5% APY. And from the 18th of May to the end of May, that gave me 68 cents, which will be paid in Bitcoin. If you are interested in BlockFi, where you can open an interest account and buy Bitcoin, you can use the link below. It gives a $10 bonus when you invest $100 or more. I received 2 dividend payouts in May. The reason I bought Clorox last month was that I only got 2 dividends this month compared to 9 in other months. I bought Clorox too late to get paid the Clorox dividend for May. But AT&T and AbbVie did and paid $1.13 in total. And of course, this will be added to the stock to buy in June, along with the $50. Now let's take a look at the stocks I will examine and why I choose these 2. As I mentioned in the beginning, I choose to examine Hormel Foods Corp, ticker symbol HRL, and Procter Gamble, ticker symbol PG. Last month I chose to add a dividend stock that does a payout in February, May, August and November. This is because then only 2 out of the 15 stocks have their payouts. Then still AbbVie and AT&T have quite a high dividend payout, so I still got above the $1, just like in the other months. However, AT&T will cut its dividends nearly in half and ended being a dividend aristocrat. This is an example that a well-balanced dividend portfolio is necessary to handle cuts like these. And last month I bought Clorox, which pays out in these months exactly for this reason. However, since AT&T has a high dividend and with being cut in half, Clorox does not completely fill this gap. So I decided to buy another stock that pays their dividends in these months, and both Hormel Foods Corp and Procter Gamble do so. They are dividend aristocrats, or even kings, and have a reasonable dividend yield. Do you like how I work and want to buy the same stocks now and in the future as part of your portfolio with no effort? You can make an account by eToro and copy my trades automatically by using the copy trader feature. Of course, at your own risk, I am not a financial advisor. So let's start with analyzing these companies. First, we take a look at what these companies do in short. Hormel Foods Corporation is an American company, originally focusing on the packaging and selling of ham, spam, sausage and other pork, chicken and so on, products to consumers. And by the 1980s, they began offering a wide range of packaging and refrigerated foods. Hormel Foods owns brands such as Applegate, Jenny O, and Skippy. The Procter Gamble company is an American multinational consumer goods corporation. It specializes in a wider range of personal health, consumer health, and personal care and hygiene products. These products are organized in several segments, including beauty, grooming, healthcare, fabric and home care, and baby and family care. Brand examples are Pampers, Gillette, and Head & Shoulders. So let's look a bit closer to these two different stocks and analyze them using the 7 steps. The first step is to look at the dividend yield, the annual dividend paid divided by the stock price, and this multiplied by 100 to get the percentage. A yield between 3 and 7% is considered to be a good catch. The dividend yield of Hormel Foods Corporation is 2%, and the dividend yield of Procter & Gamble is 2.4%. So both do not meet this first criteria. The second step is to check the dividend growth of over 10 years or more, a sign of a solid dividend and a feature that is attractive for dividend investors. Hormel Foods Corporation has 55 years of consecutive dividend growth, and Procter & Gamble has 64 years of growth. Of course, both are dividend kings, and they meet these criteria easily. The third step is to look if the payout ratio is under 70%. The payout ratio is the amount of earnings paid out in dividends. The dividend payout ratio is ideally under 70%. You do not want a company that pays out almost every cent they earn to dividends only. That is too risky. Hormel Foods pays out 56%, which is great, and Procter & Gamble pays out 61% as dividend. So both meet this criteria. The fourth step is to look at the 5 years dividend CAGR. The dividend CAGR, or compound annual growth rate, is a fast way to measure the dividend growth. Numbers you would like to see are 7% or more, and if that is not met, then add the previous mentioned dividend yield. If they add up to 9% or more, then it's still okay. Hormel Foods has a growth rate of 12% and meets this criteria. Procter & Gamble Company, however, has a growth rate of 4% and does not meet this criteria, not even when the dividend yield is added. The fifth step is to check the trend of the dividend yield, a way to check the ratio of the stock price and dividend payout over the years. You would like to see an uptrend where the dividend payout rises more than the stock price. I'll just check the last 5 years. Hormel Foods Corporation shows a nice uptrend, which is great. Procter & Gamble Company shows a downtrend, so not so good for this criteria. The sixth step is to look for the year-over-year trends of the revenue of a company. Procter & Gamble performs quite well and has an increase every year, so that's very good. Hormel Foods Corporation has one decline, so not bad, but not really good either. Number 7, the last step, is looking for increasing year-over-year cash flows. Procter & Gamble, again, performs quite well and has an increase every year. Hormel Foods Corporation does not meet this criteria. Now to look at an overview of the steps and results. Both companies do not meet the criteria for dividend yield, step 1, that are below the 3%. Both stocks are dividend kings and meet the dividend growth of 10 years or more, step 2. Both have a great dividend payout and meet the criteria in step number 3. Hormel Foods Corporation meets the criteria of step number 4, the 5 years dividend CAGR. Procter & Gamble Company, however, does not. Step number 5, the trend of the dividend yield. Hormel Foods Corporation shows an uptrend, very good. Procter & Gamble Company is the other way around. For step number 6, the year-over-year trend of the revenue, Procter & Gamble Company meets this criteria. Hormel Foods Corporation is not good, but not bad either. And for step number 7, the increasing year-over-year cash flows, Procter Gamble Company meets this criteria. However, Hormel Foods Corporation does not. If you rate all these steps with a 1 for good, a 1/2 for not so good but not so bad either, and a 0 for bad, then Hormel Foods Corporation has a score of 4.5 points and Procter & Gamble of 4 points. Like the last time, both companies are not that far apart, so both seem like a good investment. But Hormel Foods Corporation scores just a little bit better. Remember, I am not a financial advisor. This is for entertainment and a bit of educational purposes only. Any investment has risks, so do your own research. And so I found my stock to buy for June. When the market opened on the 1st of June, I bought for $51.13 Hormel Foods Corporation, ticker symbol HRL. If you like this video, please consider liking or sharing this video and subscribe if you haven't already. It helps me to grow this channel. Thanks for watching and see you next video.